Affordable housing is looking strong. Zomato has stopped falling. Reliance Industries is up 2%. Daljit, have you ventured into buying any of the Adani group of stocks in this decline?
No.
Why?
Since beginning, they've been always over-leveraged companies with very little cash flows. Most of the companies in the business were very little cash flows, except Adani Ports, where there was a steady state of cash flows, but that was highly linked to the economic performance. And so we were not comfortable with the high leverage, and that's why we never bought any of these stocks.
I mean, it's an independent company. It's a company which has a beautiful track record. It's a company which is not an original Adani Group company. Would you be looking at buying into Ambuja because the stock has fallen from what 560 to about 340, 350?
Yes, in fact, we have added it at 325 and 340, 350 in this range. 2 days we have added also there. So that's again from 325, 340 levels before this Adani deal happened. This stock used to be trading at this level only, right? And then we saw there is a lot of issues with logistic cost, coal cost, all these things going up, and price not coming up for cement companies. So most of the cement stocks were down. We are very bullish on cement sector as such. Our preferred picks have always been Shri Cement and Dalmia Bharat. And Ambuja is added because of the valuation comfort which came at 325, 350 rupees. After this deal of Adani, it went straight away to 580. You know? So that time we were puzzled whether why the stock is running so high and that valuation was not giving us any comfort. Many people were talking about that this the capacity will double and all of this, but this is a cyclical industry and this is a commodity company ultimately. Whosoever may come, but things will take their own time. So it is better to buy these things only at the comfortable valuation. So when in this mayhem, this valuation has come to the comfortable level, we have taken that opportunity. It is now a part of our portfolio.
Right. Okay, let's address an ET Now exclusive then. And Tata Steel is gearing up to raise about 4,000 crore rupees via a bond sale. My colleague Anurag Joshi has been picking up all the details and he joins in with the same. Anurag?
Yeah. So Tata Steel is planning a 4,000 crore rupee bond sale, and this will be the company's first bond sale in 5 months. Let's remind the viewers that in September, the company had issued 2,000 crore rupees of bonds. Tata Steel is seen as one of the key issuers. So whenever they come into the bond market, I mean, their pricing is definitely watched in league with Reliance Industries or probably if you look at the banks, the State Bank of India. The Tata Steel bond issue is also coming at a time when there are other companies which have lined up debt issuance, notably Housing Development Finance Corporation, which is due to merge with HDFC Bank, and they are planning 25,000 crore rupee bond sale. All this is coming just on the heels of RBI Governor Shaktikanta Das in the RBI in the central bank's monetary policy. He flagged that this month. He flagged that the worst is behind us as far as the inflation goes. And that's something that's giving more comfort to companies that are looking to do debt sales.
Thank you so much for joining us with that. But the stock that I want to flag out at the moment is Tejas Networks from the Tata Group. That one is flying away in trade. Of course, there are reports suggesting that the company will be deploying 1 lakh network sites to launch the 4G services. Remember that BSNL order has been in the works for a long time now. But it does seem like it's finally seeing the light of the day because the BSNL board has actually approved it for now. That's what the report is suggesting. And they've now made the recommendation for the purchase order to be given out to the Department of Telecom. The order, remember, is valued around 20 to 25,000 odd crores. That's the expectation and that's what reports are suggesting. And it, of course, includes the network gear cost of 13,000 crore and will also include a 10-year maintenance contract. So it has two parts of the services. One would be the software, which would be provided by TCS. And second would, of course, course be the hardware portion that might come from Tejas Networks, and that's the reason that stock is up almost 11 to 12% at the moment. But separately, the stock which is down in trade today is MCX. That one is down because NSE, remember, has done a tie-up with CME for some of the crude derivatives as well. Earlier, that was only done by MCX. Now there is going to be more competition coming in, and perhaps that's the reason that stock has hit a 3-month low level. Before I ask the closing recommendations from my chartist, Nuresh just wanted the chart checks going for these two counters, MCX as well as Tejas Networks.
So MCX has been a stock which keeps making that pullback and again flops out. So the last time it broke out was about 1350, 1400, went to 1650. Couple of times it got tested here, and now we are back to the lower end of the range. Not very promising here, so would be a total avoid as of now. Tejas Networks is something which has gone through a sideways to a deep correction now. The phase is over, it seems. It went through a big cycle last time. It went from 150, 200 levels to 550, consolidated there, then made another move to 750, and now we are back to the 550 mark. So this looks interesting as a medium-term bet. I would expect it to hold 500, 550 levels, and then eventually go towards 650 to 750 also. So out of the names, Tejas Network looks promising.
Ajit, what is the best way to, let's say, participate in this entire 5G mega capex which is now underway? Daljit, what to your mind is the best way, a best stock to participate if somebody is bullish on the 5G rollout?
Okay, so we have not done too much work on this space on 5G and what could be good opportunities. But I think overall on the space of automation, we are very bullish. So we have that stock called Honeywell Automation in our portfolio that we like. And then Siemens is another one which has again been taking a lot of news flow on the locomotives and other things. But otherwise, their automation business is also very strong business, which is coming up well. So we are playing through these two companies. Exactly with the telecom, we are not doing any major thing.
Okay, telecom not looking very attractive, but for Siemens, as you pointed out, it's hit an all-time high intraday level. It's broken out from an upward sloping resistance trend line, and the Q3 profitability was up almost 85% on a year-on-year basis, with a heavy uptick coming in on the order book as well, and that's the reason that stock is up around 3%. It's also having a rub-off impact on ABB, which is now up around 3% as we speak. But other than that, some of the other buzzers that I wanted to flag out, it's GIC, which is up 8% now. You also have some of the other insurance names which are doing quite well. So New India Assurance, etc., is also something that one should watch out for. In fact, Daljit, the question regarding the entire insurance space, LIC, of course, has been under pressure regarding the entire Adani saga. But other than that, if you had to pick up any name from, let's say, the private insurers or even general insurers, what would be the top bet?
See, insurance is a very long-term play. So while we may keep saying that one can look at various, this stock is beneficial, that stock is beneficial with one news item, with another news item, but one has to keep in mind that this is a very long-term play. And if you want to really stay with it for a very long term, means 3-5 years, then only you should look into this space. The stocks will keep moving up and then come down within next 2 days, 5 days only. So this is what we have seen in with lots of companies, with HDFC Life, SBI Life, and all that. Right now, our preferred pick is SBI Life because they have been consistently gaining market share. They have been maintaining this new business also very well, and margins, not meaning the new business is coming not at the cost of margins, etc. for the company. So which is a good thing for company. And because of this changes in the budget regarding some high net worth policies, etc., there was a lot of mayhem in these stocks. So SBI Life actually gave a very good opportunity also. It is even now also valuation wise quite attractive. So we like SBI Life.
Right. Okay, Daljit, always good to have you on the show. Thanks for taking the time out. We'll slip into a quick break. Still flat for the Nifty, although it's making an attempt to see a bit of a pickup, so 50 odd points higher as we speak right now. TechM is now up over 5% in the futures. iShares, Apollo Hospitals and Reliance, by the way, is now standing at a 2% gain, so contributing to the Nifty move. Quick break, last half an hour when we come back.
Well, a big move is what we are witnessing at this point of time on the Nifty. We are past the level of 18,000. It's of course taken us, 20, 30 days to come back to that level, because for the longest time we were stuck in that range of 17,600 to 17,800, and then 18,000 was the other resistance level. But after almost 20, 25 days, we have finally managed to break out of the range, and 18,000 is the level which has been scaled. In the last few minutes, the uptick has also been led by the banking names. So Bandhan Bank is up 3%, Kotak Mahindra Bank is seeing an up move, ICICI Bank, etc. are also some of the counters. And of course, then it's the heavyweight Reliance, which is contributing almost 40 points to the upside at this point of time. And then Tech Mahindra is up 6%, ICICI Bank, as I pointed out, and Bharti Airtel as some of the other big contributors for the index at this point of time. Kunal, how sustainable do you think this rally is at what we are witnessing at this point of time? Do you think that if we close above 18,000 level, that would mean with a high conviction that we're out of the range?
It seems like, because tomorrow it will be the weekly expiry, and I think if I'm not wrong, next week is the monthly expiry for the index futures. So both of the expiries are very crucial, because when we head towards a closure of a monthly expiry, traders who are skewed or inclined towards one set of positions, whether it's long or whether it's on the short side, if they get a trade which is against the trend, then they would start to there would be a scurry of covering up the position. So I think for traders who have been holding on to the short positions on the index futures, say for a good part of this Feb series, if the index scale past about the 18,000 mark, which you've seen today, and if it sustains about this 18,000 level, then it would not be comfortable rolling over the position for the next series, and that would be a stance where we would probably expect that the markets would change its tone and would get into a breakout mode. So I think it's a very crucial breakout which you're seeing today. If we happen to build up for after today's gain, say tomorrow on the weekly expiry day, then I think we would probably be getting into a zone where the breakout would be more decisive and conclusive.
Right. Okay. Let's also welcome on board then Anand Tandon and talk about what he's making of the market right now. Anand, hi, afternoon. It seems like Reliance is doing all the heavy lifting, holding up over 2% now on the futures. Fundamentally, what triggers would you hope to see?
Reliance has, multiple triggers, but clearly, for example, telecom is one of the areas where I expect Bharti more than Reliance, but both to benefit as the 5G rollout goes out, and the fact that Vodafone continues to not do particularly well, so the market share of the two majors will continue to grow. Also, from their traditional businesses, they haven't been doing badly, and we do expect retail and the other parts of the business for Reliance to do overall quite well. It has been somewhat of an underperformer, and therefore I would expect that it is now time for Reliance to catch up.
See whether that catch-up really continues for now or not, because at least the mid-cap index is seeing quite a bit of rally at the moment, an uptick of almost 0.6%. The market breadth seems to be improving also a tad bit, and then you have the Sensex, which is up around 250 points as well. Let me take the closing trades that our chartists are executing at this point of time, given the surge that we are seeing in the markets at the moment. Naresh, you go first. What's the closing trade?
So that's a ban LTI Mindtree. We are seeing a good momentum across the whole mid cap and the small cap IT pack. LTI Mindtree, the recent highs over the last 3-6 months was around 5,100, 5,200. I expect it to be reached in the near term. So this has given a short-term breakout on hourly charts as well.
IT counter coming in from Naresh. What about you, Kunal?
Frankly, executing a lot of trades, but then the one which I would probably mention at current levels would be Reliance Industries. I think that's a stock which has confirmed a breakout, discussing this thing in the morning as well. So I think it looks attractive even as a carry forward trade from current levels.
Okay, and you also have Phenolics Cables, which is seeing a bit bigger surge at this point of time, 11% move coming in there. Of course, Apollo Hospitals has been trending higher throughout the trading session, and then in the last few minutes, there has been an uptick on Kalyan Jewelers, etc. as well. So a lot of sectors that are actually doing well. Anand, we are at the end of the earnings season, right? If I had to ask you in terms of the key takeaways of the earnings season, or if there is any other, stock idea or sector that has come to the forefront on account of it, what really stood out for you?
Well, I think by and large the earnings were in line with what people expected in terms of the sectors. I'm not talking about individual stocks. Obviously, cement didn't perhaps excite as much as people were expecting. On the other hand, capital goods clearly has done perhaps a little better than what could be expected. Banks are pretty much in line or better, and therefore remains one of the heavyweight sectors that will have to work throughout the year in terms of earnings for the index to move up. I think the only dilemma right now, really among the large sectors, has been in terms of technology. Whether you want to be bullish on it because of the fact that the US is cutting back and consequently there may be some more offshoring, or on the other hand, the fact that the overall macro for IT remains weak in terms of budgets. Has it corrected enough and therefore offers an opportunity? To my mind, it is now at a market performer, if not marginal outperformer for at least many of the frontline companies. So overall, the earnings season I don't think has been particularly good in terms of surprises on the upside. In fact, I would think downgrades were reasonably large and merit attention. I think you have to keep your focus on the sectors where growth is expected, and that will remain banks among the large ones. I think consumers will continue to do reasonably okay. Some of the new tech is beginning to look a little more interesting, but I think still remains somewhat expensive. So if they correct enough, then again you may have some opportunities there. I think one of the biggest sectors which didn't do well at all has been the chemicals. So one has to see if there is some surprises that may come up later in the year from those sectors.
Okay, let's take it across to Vinny then and find out what is it that we can expect from Nestle's earnings. Vinny?
So Nestle is the last FMCG company to report its numbers. We'll be looking at it on a standalone basis, and do not forget it's their Q4 current year 22 numbers. Year-on-year basis, we're expecting to see a decent growth of 15% in terms of revenues, while profits will see a stronger growth of around 61%. But do not forget, last year, the base, we are not including the exceptional loss that we saw of 236 crores. So if you include that amount, then comparing that adjusted profit, then it's a muted growth in terms of the profit for the company. Otherwise, in terms of the operational performance, we are expecting the EBITDA to see a growth of 9%, while margins are expected to see a contraction coming in, and EBITDA margins expected at 21.7% versus 22.8%. So 100 basis point contraction in terms of the EBITDA margin of the company. Revenue growth mainly to be aided by the price hikes. Do not forget the price hikes that companies have taken, as well as the distribution expansion that Nestle is doing. So that is supporting the revenue growth of the company. Also, it's expected that the growth momentum will be strong for the company, and especially its out-of-home consumption products that will see a higher contribution coming in from Nestle. So that's a factor we're keeping an eye out on. India business as well as the export business, both are expected to see a strong double-digit growth coming in, while margins, mainly the contraction is obviously for a factor of input costs. Raw material prices have remained quite volatile, so keeping an eye out on that one as well. Let's keep an eye out on commentaries for the trade channels, rural demand, how is that shaping up, new product pipelines, what is that looking like, as well as the demand trend, especially for the packaged food segment.
Okay, Vinny, thank you so much for that. But if you look at the stock-specific action today, you have names like Siemens, which are sitting at all-time high level. Cummins too is at all-time high level, and then other names like ABB, etc., have also been doing well for themselves. Naresh, is it a good time to book profits in some of these counters, or one should continue to hold positions?
So in terms of names, Siemens is something which has come to the shorter-term target price, which is where one can look at booking profits at 30, closer to 3250 to 3350 zones in a slow and steady manner. The stock has already moved up quite a bit, and one can look towards shifting it to L&T, which still has a lot of catch up to do. ABB has just made a small move in the near term. It is still away from the previous 52-week high. That can go further higher. So I would suggest a shift from Siemens to L&T, which still looks promising, could surprise on the upside.
Anand, we were debating here in the studio whether the cap goods names are also becoming the new FMCG, given the kind of rich valuations that they're quoting at. For someone who's completely missed out on the rally in cap goods, can they still jump in, even at these valuations?
So, there is no particular segment of the market which looks cheap per se. But that said, if you look at capital goods, the order books that they have reported are fairly robust for most companies. And, it does look like the capex cycle is translating into more orders for the suppliers. As a consequence, if you choose your sectors reasonably well, I think, you're looking at profits which will continue to grow from here on. The kind of capex, for example, railways has announced is unprecedented. So that, if it were to actually materialize, will lead into many companies finding multi-year kind of increases in their order books. Now, that said, you want to buy them at 60p, I think, you would find that 40p is kind of the base. As the E increases, you would get at least the upside in terms of the earnings growth, if not on the valuation upside. So long as there is a strong enough earnings momentum going forward, what is likely to happen is that if the valuations are too much, you'll get a little less than the earnings growth, but you'll still not lose money. If the valuations are adequate when you enter, you will at least get the earnings growth fully. So in either way, in a market which is otherwise, a little more iffy and a lot more volatile, here is certainly a place where you could perhaps get in and protect and if not marginally grow your money.
Okay, wanted to bring up the chart of Finolex cables again because it's piling onto more gains. It's up almost 15% now. The earnings, if I have it right, were out already a while ago. So not that it's a big earnings sudden reaction coming in, but nonetheless, that stock is up almost 16% now. Kunal, your take, if you track the stock Finolex cables, what should one do? And also ICICI Bank, because you've been quite positive on it and that continues to be on a steady uptrend.
Yeah, I think the breakout which we were anticipating for ICICI Bank since the last, I think, a week or so, I think that's finally happened. At least in terms of the indicators, we've got that confirmation. So I would expect the stock to now cross past about the 900 mark and get into a breakout mode. That should probably propel as well as help the bank Nifty, quite strongly. So I think for an index trader, it's a good sign that ICICI Bank is emerging back as a breakout candidate. Traders who are looking at for bank Nifty options, I think at 41,700 odd, buying in 42,000 call option or maybe 41,800 could be a better strategy. On Finolex cable, this is a very strong breakout. Now, it's not that the stock was not doing pretty well. It was holding up quite well for the last couple of months. I think from the October-November highs, the stock had been holding about the 600 odd mark, 575 to 600 levels. It was also chugging along with the 50-day moving average for itself. So, it doesn't come as a surprise that the stock is breaking past on the upside. The volumes are quite strong. The momentum has been quite strong for the stock over the last 6-8 months. So I would expect this momentum to continue. The all-time high levels for the stock is still not reached. That's, I believe, is closer to 750 levels for Finolex cables. And I think that this move could probably culminate closer to this all-time high levels or slightly beyond that.
Okay, that's the take coming in on Finolex cables, holding up quite smartly in trade. Apollo Hospitals has really been one steady mover today, 5.25% higher there. Indiabulls Housing Finance as well is looking smart, though on the other hand, Indiabulls Realty is the one which is taking a knock after its numbers. Bata is also under pressure after a poor performance in terms of numbers. Metropolis is down 2%. Interglobe Aviation is down 3%. I mean, strange as it may be when you have all, the buzz around the Air India Boeing orders, Interglobe Aviation, the one listed solo player within the aviation pack, that's down 3%, no less. And Bharat Forge is the one which is taking a knock of about almost 5% or so. Anand, what do you make of the entire CV story, and especially with players like a Bharat Forge, with the Class 8 truck orders diminishing and that really impacting their business?
I think when you're looking at international markets, obviously it becomes a little more difficult for people sitting in India to make a projection. Not very long back, we were told that the order books are doing very well, and now suddenly the situation doesn't look that good. Clearly, in a global market where there is a likelihood that this could be a bad year in terms of GDP growth, any economy-sensitive business like CVs, etc., will not likely do very well. So I think at this stage, it may be better to focus on companies which have more exposure in India and wait for a year before you look for companies which have global exposure. I think Bharat Forge may be next year's story. This year, if you are looking at CVs, I think you will find that there is more activity in India, and therefore companies which are focusing on that are likely to do better.
Perhaps a better time to look at India at the moment rather than looking at many export-facing counters. But time now to go across your chart is to get the BTST ideas out of the way. Naresh, let me first come to you. What's catching your attention as a BTST idea?
So first is a buy on LTI Mindtree. The stock has shown good momentum. Expecting this to continue. A stop loss at 4,700 and a target price of 4,900. Second is a buy on ICICI Bank, following up from yesterday's momentum. Expect this to go towards 885 to 900 in the near term. A stop loss at 860.
What about you?
So as a BTST play, I would suggest two buy calls. The first one is Reliance Industries, targets of 2,500. Stop loss is trail high to 2370. And MGL is the other stock from the gas space, which is also broken past about the psychological 900 mark. So that's also a buy. 940 as a target, 880 as a stop loss.
Okay, so quite a bit of conviction coming in on names like ICICI Bank as well as Reliance and LTI Mindtree, because the charters have been reiterating their calls multiple ways as far as some of these counters are concerned as well. But GIC, that's something that also deserves attention given the fact it's now up almost 12%. New India Assurance has piled on gains of around 6%. And of course, there are other names like Kalyan Jewelers, Aditya Birla Retail, etc., that are also surging as we speak. Anand, wanted your take regarding a couple of these footwear companies as well, right? You had a lot of disappointments this quarter, and before that, we had seen this massive build-up and interest coming in for these counters. So whether it's Campus, whether it's Bata, or even Relaxo for that matter, all have managed to disappoint handsomely. What should an investor do if they hold the stock at the moment?
I don't think I should comment on that sector. It's not something that I've been looking at, so you'll have to excuse me for that.
Sure, okay, so that's a sector that's not been well tracked. But what about FMCG as a whole? Because again, it's a bit disappointing of late. It hasn't done much, even in terms of earnings. Everybody was talking about rural recovery. That hasn't panned out. And even the margin expansion is not trickling in. Today as well, FMCG is on the back foot. Is there any name from the old school staple names that you would want to have in your portfolio as a defensive?
Well, I think the rural story will likely be better for the coming quarters as the agri crops are likely to do better, and more importantly, the prices have also gone up quite a lot. Obviously, there is a slowdown in terms of consumption, and while so far urban India has been holding out, it is the initial feedback for at least large ticket items, especially for example, real estate, etc., is beginning to show signs of fatigue. So consumption will be a little bit of a problem, especially if inflation continues to rise. Among the consumer-facing companies, I would argue that FMCG is slightly better placed because A, they are more essential in their nature, and secondly, because of the high value branding that they usually enjoy, they will be able to pass on at least the cost increases, which is never rolled back. So as a consequence, as inflation moves down, obviously, you are able to maintain a higher price, and you can pass on margin increases. It's a longer term story. I think if inflation, the prices had gone up quite a lot, way ahead of their earnings. So to some extent, from a stock market perspective, they will also correct. But at this stage, I would still argue that those which are improving their distribution, especially in rural areas, and have products which will attract rural consumers, is perhaps one of the better places to be in, given the kind of softness that we are seeing in prices.
Reliance, ICICI Bank, what's going to move first to
Nifty.
its previous highs?
Nifty.
Nifty before ICICI
No.
Bank and Reliance?
It's meant to be. But I think both these stocks should move up first. If you ask me to bet, I'll probably bet on ICICI Bank first.
ICICI Bank getting back to 950.
Getting back to 950.
Wow, okay. And Reliance catching up soon after.
Yeah, Reliance catching up soon after.
And then the Nifty. Okay. But anyway, 100 points higher actually for the Nifty. So what looked like a completely listless day, I think till a few minutes back, we made it back to that 18K mark, 0.5% higher. And really all about Reliance today. Reliance, in fact, is now closing in on a 2.5% gain on the futures. There's M&M, of course, which is also strong. TechM is powering ahead, Apollo Hospitals. But in terms of weightage, these stocks don't have much of a bearing. It's really Reliance all the way. Bharti up 1.5% right now, and ICICI Bank as well is holding up 1%. It's now at the highest point in the day. ICICI Bank 873 is where ICICI Bank is. So that's pretty much mirroring both ICICI Bank as well as Reliance, what you're seeing on the Nifty, the fact that it's back at that 18K mark. Kunal, though, what's looking as the weakest link in the market right now, sectorally?
Well, surprisingly, not too many sectors which are actually showing signs of weakness. But then I think the pharma stocks are still languishing. That's the only sector which even the FMCG pack are not participating, I would say, in a very cohesive manner in this kind of an up move. And it goes with the usual market tonality that when the markets are into a bit of a risk-off mode, or there's not too much of trading, then the sectors, the likes of pharma, FMCG, the trading activity over there drops significantly. The position being carried forward, that drops down significantly, and the high beta sectors, the likes of, maybe if you can probably look at Tech Mahindra and the IT stocks, the mid cap IT names, specifically the real estate pack, are looking quite attractive. Reliance is making a comeback. Few of the high beta pockets within the bank Nifty, those stocks are also making a comeback. So I think it's the comeback of risk which could probably add up to the market leg, and I think that would probably keep the markets busy in trading high beta sectors as well as the momentum sectors.
Well, yes, absolutely. Look at some of those real estate names, as you pointed out. Prestige is up around 4%, Brigade Enterprises up 3%, DLF, then you have Indiabulls Real Estate. All of these counters are flying away in trade. Anand, what should one do regarding real estate? Because on one hand, we kept talking about how the demand momentum is likely to continue, but on the other hand, the increased EMIs are definitely going to have some sentimental impact, right?
Even more than the sentimental impact, I think they will finally depend on the consumer budget, and if the budgets become too high, it is going to impact demand overall. Now, 0.5% increase by itself doesn't make a significant difference in the EMI, but if you compound that a few times over and then you take it over the next 20 years period, then it obviously makes a lot of difference in terms of the amount of money that is paid out. There was a kind of a long period of lull where real estate wasn't moving, and then we had this huge uptick. I think it will slow down from here, but I would imagine that at least for the next few months, it will still remain reasonably buoyant. Already we are seeing signs that the construction activity for new starts has started to slow down in most markets, and I expect that trend to continue. But for the near-term performance in terms of sales, may be reasonably okay for the next 6 months at least.
Yeah, Anand, great to have you on the show as always. Thanks for taking the time out and joining in. We'll let you go on that note. Let's just begin winding up the day, and not bad at all considering we managed to scale it up and bring back that 18K mark for the Nifty. So 18,020 is where we're shutting shop, 0.5% higher, 100 points up in the green for the futures. 18,046 is where that level is closing in. Reliance, ICICI Bank, the biggest contributors to today's Nifty move. And then, of course, there's been a Kotak as well. Bharti too has managed to hold out in the green. Tata Steel as well has seen some amount of recovery. And actually, it's the IT names too which did recover a fair bit, as did ITC and SBI, which at least managed to jump back into the green. So that's clearly rubbed off on the index. These are the recoveries that one has seen in the last 10 odd minutes or so. The movers, of course, have been Techem, Apollo Hospitals, Eicher Motors, Bajaj Finserv, SBI Life, Grasim amidst the large cap category names. Still under pressure for a Unilever that's not really gone anywhere from where it started off trade, and L&T as well has been a bit on the sidelines, as have HDFC and HDFC Bank, even though they closed off the day's lows, but still in the red. For the market breadth as well, we closed in well in favor of the advances today. But on that note, we're going to wind it up right here on this edition of Closing Trades. Thanks for watching.